Hello everyone, Joe DiBrita back again for another video review of the JMRD Watson baskets. Today I'm going to be joined by Rob Watson and Adam Watson from our Chatham office, and we're going to be talking about the JMRD Watson Dividend Private Portfolio. What a quarter, guys. This is great timing to have a call.
Joe, thanks for setting up this interview. It's great to have a large enough team that we can use mediums such as this to reach our customers. Not everybody has that access, and I appreciate it.
Yeah, Joe, thanks again, and hi everyone. It's great to be seen.
Okay, let's get right into it. As some of our clients are not as familiar with the investment objective and management style of this portfolio, could you please explain how you find value holdings with growth potential at reasonable prices?
Well, Joe, for over 13 years, we've searched the globe for companies that can grow their sales, grow their earnings, and grow their dividends. We look for companies that are diversified by industry and by geography, and this has helped us to grow the portfolio at above average, beating our benchmark, and also with a lower volatility.
Yeah, we use our own screening process to filter through a few thousand companies between Canada, US, and international, and after that we go into deep dives to decide who should be added to the portfolio and who we should remove, depending on, of course, how the growth mechanisms are going and market returns.
Thank you. This is a great explanation, and I think this is a strategy that really resonates with our clients. And furthermore, it's something that's worked out really well. Let me just grab the numbers here. We're looking at a 13-year track record now with 12.75% growth rate, and you're coming off a 14.8% quarter. Can you talk a little bit about how this compares to your benchmark and what moves you made in the quarter to achieve these results in Q1?
Adam?
Joe, I'll take that one. So our benchmark returned about 6.9% for the first quarter of 2021. So we very easily exceeded that in the quarter, and that's part of a long-term trend where we've managed to keep up or exceed the benchmark while having less volatility. The seeds of this quarter have been planted over the last year. We've had the most active year in the basket's history through the COVID pandemic, changing lots of names as the world changed at the same time. Our biggest trades were keeping Williams-Sonoma, which was the top performer in the basket for the quarter, adding Tourmaline in December, which was the second best performer in the quarter, and even tactically, we added Illumination Couche-Tard last March at pandemic lows, and when they went and flew to France to potentially negotiate a takeover, the stock fell 20% in 2 days, and we were able to double our position, which led to about a 10% return on the position to negate turning the worst performer in the basket to an average one through timing and opportunity.
Again, fantastic work, guys. That was an excellent update. Are there any parameters that you need to follow when you're investing in this basket?
Yes, we hold about 20 securities in the basket, and we can't have more than 10% in any one security or 40% in any one industry. We diversify in mid and large cap corporations, and they must pay a dividend.
And be growing the dividend.
I think our clients are going to find that we really like rules-based approaches when we're investing. I asked Zach the same question in our last interview. Do you ever fall in love with a company?
Well, no, Joe. We can't afford to fall in love with a company. We've got to follow our process. It's worked for us over the last 13 years, and we try to stay strict to the process. For periods of time, the process hasn't worked over the 13 years, but usually after a period of underperformance, there's a snapback and we get above average performance that has continued through our history of managing the basket.
I'll add that because we're tracking and screening on a number of criteria, we kind of have a list that we're watching, whether you want to call it a minor leagues or a minor basket or a future list that we want to add, and maybe the price isn't right, the volume's not right, any number of factors. So it's very easy to fall in love with a company, but that's where the rules come into place. And we've chatted about Williams-Sonoma, which is probably the best performer in the last year. We tracked that on our screening process for probably 2 or 3 years as a top scorer at the wrong price until it fell to $50 a share, in that range when we added it. And I think this morning when I looked, it was over 180. Couche-Tard would be a similar one. It screened very well, but we thought it was expensive for years and years until the pandemic hit. And there's a few more names that we're watching and waiting for the right price. So it's seeing names consistently on the list makes you want to add them, whether that's love or not. I'll let you decide.
Great answer. Thanks for that. As a follow-up here, while managing this basket, have you ever seen anything that surprised you, or maybe there's a company that you'd like to highlight in this basket?
Well, Joe, since Adam's mentioned Williams-Sonoma so many times, maybe I'll continue on that thread. Williams-Sonoma is a company that we've followed for a number of years, and we just couldn't justify buying it based on how high a price. Then after 2015, it started to drift down. About 50% of its sales were through a retail outlet, and about 50% were online. And they were one of the first companies to move to sales online. This is a company that sells furniture, pots and pans, kitchen gadgets, but they're all custom and they're very good quality. Well, we bought some at $50, as Adam mentioned, in 2018 when it reached our price range. And then when COVID hit, the world changed, as you know. People started buying online. People started cooking for the first time in a number of years in a large way. And the online sales exploded. Plus the millennials and apartment and condo dwellers shifted to home formation, and they needed to fill their kitchen and their living rooms with furniture. So Williams-Sonoma is, as Adam said, now trading at $180. So it's been one of our best performers, but it consistently has grown sales and earnings and dividend by 10% or more, and it just met our price in 2018. Adam, you want
It didn't hurt that COVID happened and everybody realized all their cooking equipment maybe wasn't up to snuff to use every day, and they wanted an upgrade. So that's a great example. I'll say probably the biggest example in managing the basket ever, and it's a testament to the basket process and how fast we can react. And it's the story we've probably told the most for how the basket works. Is we held BP Energy in the basket the day that the platform burst, and we were able to get out in 10 minutes once we decided to, which protected value for every client. So when the market is moving and lots of shocks occur, being able to react very quickly is something that's worked well and surprised me how quickly you can react positively in the Couche-Tard example, or due to a negative situation like BP.
Rob, Adam, thank you so much for taking the time to do this call and interview today. And again, congratulations on a fantastic quarter.
Well, Joe, again, I'd like to thank you for preparing this on our behalf, and for all of our clients out there. I would like to thank you as well for entrusting us with your wealth in the future and in the present.
Thanks again for having us, and look forward to chatting again on a future quarter update. Have a good rest of the day and a good rest of the month. Take care.